This is video 3 of IAS 20. In this video, we will be continuing with the recognition criteria, but we will have a specific focus on paragraph 12, the systematic basis. As you guys have already seen, this is our layout for IAS 20, and we will be specifically looking at paragraph 12. As we said, this is a very important concept in IAS 20, and you will need to be able to understand this by the end of this video. So what does paragraph 12 tell us? It tells us that we can recognize this government grant in profit and loss in a systematic basis over the periods in which the entity recognizes the expenses for which the grants are intended to compensate. Okay, so let's just think about this. Think about what knowledge you have in FPS in those subjects already. So if I receive a grant for a project that runs for 3 years, can I recognize all the income in year 1? No, this is not consistent with what we know. Okay, so can I then recognize it equally for 3 years? Okay, but what if I spend 10,000 Rand in year 1, but I spend 2 million in year 2? What do we do then? Okay, so what paragraph 12 says is, where are the related expenses? You recognize in profit and loss over the periods in which the entity recognizes the expenses. So in terms of paragraph 12, we are looking for when and where the expenses are recognized, for which the grant is intended to compensate. Now let's have a look at our journals. So day 1, we receive this grant. So we debit our bank and we credit deferred revenue in our SFP. It's very important that you guys see that this is an SFP item. And then why? Because we are deferring the recognition of income. Okay, and when we do recognize this income, we decrease our SFP item deferred revenue, and then we recognize an income in government grant amortized in profit and loss. You can also call it government grant income. Okay, but the important thing is to see is that you decrease your revenue, deferred revenue SFP, then you increase your profit and loss income. Okay, so what basis are we going to use? If we have a specific expense, we amortize to profit and loss in the same period as the relevant expense. For example, if I spend 100,000 Rand in year 1 and 110,000 Rand in year 2, we use that ratio to see in which year I recognize how much income. Then very importantly for you guys to understand, the amortize they are talking about here is when you decrease the deferred revenue. Okay, so as soon as I decrease the deferred revenue, I am amortizing this deferred revenue to profit and loss. And that's all what it means. Then if we have a depreciable asset, we amortize in the same period, in the same portion as the depreciation. In other words, if the useful life is 3 years for the asset, then you write off the deferred revenue over 3 years. Paragraph 18 also has a very specific example for us. It tells us that if a grant is related to a depreciable asset, so may require fulfillment of certain obligations and you would be recognized in the periods that bear the cost of meeting the obligation. Now here's the very specific example. So if you receive land, it may be conditional upon the erection of the building on this site. So you receive land, but you have to put up a building. It may be appropriate to recognize the grant over the useful life of the building. Why does this make sense? Because the grant was intended to put up the building, and the building is going to be expensed to profit and loss when you depreciate the building, and therefore you write it off in the same useful life as the building. Paragraph 20 also has another very specific example for us, that compensation for expenses already incurred by the entity, or for purposes of giving immediate financial support with no future related costs. It tells us that you still recognize the grants in profit and loss in the period in which it becomes receivable, even if you only receive it later. Then paragraph 16 answers a very important question for us, that what if there is no systematic basis? Okay, it tells us that you recognize in profit and loss when you receive the grant. But remember, we said that we want to recognize in profit and loss on a systematic basis. So this is in very, very rare cases, and it has to be a very good reason why there is no systematic basis. Remember, we want to do it on a systematic basis, and even we only do paragraph 16, recognize it immediately in profit and loss when it's received, if there is no systematic basis.